Welcome back. You're still tuned into Midcap Radar. While we're talking about Midcaps, just look at Arvind Smart Spaces. That is a stock which is higher in trade. It is logged in upper circuit. The company says that they have been able to sell their entire project in Bengaluru within 7 hours of launch. It consisted of 220 units valued at more than 160 crore rupees, and the project is housed under HDFC Platform 2. And with that, they are expanding in the Bengaluru market, apart from Ahmedabad, of course, which is a micro market. So just keep that stock on your radar as well. But let's move on, and as promised, let's put focus on Vinati Organics. The company reported what was a weak set. However, in their conference call, they did indicate that going forward, they will see improvement. And they also have spoken about how they've received the NCLT approval for merging viral additives with Vinati Organics. So we have with us Vinati Saraf, who's the Vinati Saraf Mutreja, who's the managing director at the company, joining us now. Vinati, good afternoon. Thank you so much for joining us. Well, you did indicate that there is improvement that you're seeing, especially in ATBS. Q4 could be slightly better or equivalent to Q3 as well. Can you give us a sense of what is leading to this improvement? Where is demand coming from? And is this going to be a sustained momentum as well?
Sure, absolutely. See, last year, if we look at FY24 or the calendar year 23, we saw a lot of destocking happening from our multinational clients. In fact, what had happened in the previous 2 years, customers had over-purchased product, and they were sitting on a lot of inventory for about 3 to 4 quarters back. And now that those stocks are over, and we are seeing good order volumes coming in for most of our products starting February and March. And hence, I think that we have already bottomed out, and I expect FY25 to be better than FY24.
Okay, expect FY25 to be better. Vinati, thanks for joining us. This is Pavitra. When do you think Vinati Organics and the entire industry also can move to full recovery? When do you see that happening? And, will the recovery be sort of broad-based? Do you expect it to happen across segments, or are there, portions which are looking better now?
See, I can speak for our company. I'm already starting to see a recovery starting March. So you will definitely see the effect in Q1 of FY25. For the rest of the products, for other products, again, it's very application specific. Like my product, IBD, which goes into pharmaceutical, there we are seeing a good pickup of demand. Similarly, ATBS, which goes in oil and gas water treatment, has already seen a pickup. IB, which goes in agro, is doing stable. Our Buty Phenol segment also is running at highest level of capacity. Our antioxidant unit, which is there, the recovery is slower. That goes in the plastic industry, in the polypropylene. So it just depends on the application and the sector.
Okay, so recovery is different for different products, and that's the sense we've been getting from different chemical companies as well. Not everyone's agreeing to a full recovery from FY25, so it's very product specific that way. But let's talk about ATBS. This is one of your biggest products. You've spoken about commercialization of the newer project and the newer plant as well. December 2024 is when you will expect it. What will the initial capacity utilization look like? What is the asset turnover on a product like that? And how much will it add in terms of incremental revenues in FY25?
Our FY24, my old line in ATBS itself was not fully utilized. So I expect my old line to get fully utilized, run at full capacity utilization in FY25. So really the revenue from the new line will only start coming in from FY26, even if it's ready by, say, December or January this year. Now, lines such as in ATBS being a brownfield expansion, one can expect an asset turnover of anywhere from 1.5 to 2 times on the investment.
Vinati, how often do the ATBS prices change? Are these very long-term contracts usually?
Well, the contracts are long-term. The prices change usually quarterly. We have a quarterly formula-based pricing based on the changes in the input prices.
Okay, all right. So, apart from the earnings, I would like to understand about para-tertiary butyl phenol as well. Vinati Organics is the only producer in the country. There was an anti-dumping duty as well. Does it benefit you in any way? Were the dumped products way cheaper than what we were producing domestically?
See, PTBP is one of the butyl phenols that we produce. Yes, we are the only manufacturer in India. DGTR has recommended the duty. The Ministry of Finance is yet to approve it. So we will really know only in the next month or so whether the duty will come into effect. Even if it does, it only, a lot of the PTBP is bought against import license. And so the effect of that duty will just be on about, say, 50% of my PTBP sales. Yes, the product was being dumped into the country from Singapore and Korea and US, and that's where the duty application is against those countries.
So how much is PTBP as a percentage of overall revenues? You said only 50% of the overall sales will benefit?
Yeah, that too of PTBP as a percentage of overall revenue, PTBP itself would be less than 10%.
Ah, okay.
Okay, got that. Vinati, if you can just go back to your numbers and talk about the margins. You've done around 26% this time, and you have spoken about maintainable margins in the range of 25 to 27. But you know, we've seen you do much higher. We've seen you do around 38 to 40 as well. So was that just a one-off? Do you think you can get back to that level as well?
No, I think realistically speaking, 27% seems to be what's sustainable. Given our present product mix, of which includes butyl phenols, antioxidants, as well as IBB, ATBS, EBITDA margins of less than 30% is what is achievable and sustainable in the next over 3 years or 4 years.
Okay, all right. Vinati, what's your sense now? We've seen the chemical industry go through a downturn. That was what happened in last 6 months to 1 year. Is the Europe plus one and China plus one theme really working? Because China is going all out. They are dumping goods at lower prices. Do you think there's still a lot more to be done before we talk about these terms when it comes to chemical industry?
See, why did China plus one? First, let's understand what happened, right? A lot of countries were dependent solely on China for a lot of products. And during COVID, China closed down. And that's how the China plus one strategy came about, where companies and countries started realizing that we have to have a diversified supply chain. And given that India is in a strong position to meet that requirement, we are seeing a lot of incentives from the government also, such as PLI schemes, a lot of interest from MNCs and companies based in Europe, in USA, who are looking at Indian companies and India as an alternative supplier. And hence this China plus one is here to stay, and is definitely Indian companies are going to benefit from it in the coming years.
Okay, all right. Last question before we let you go. What would the revenue growth target of FY25 be with the new products getting commissioned?
Well, with the recovery in the existing products and some of the new products coming on stream, let's take a target of maybe 20%, anywhere 15 to 20% growth.
Okay, all right, Vinati, thank you so much for joining us today and giving us all those details. The stock is spiked to the day's high. Recovery is the key word that the street seems to like.
Liking the sound of those comments, right?
Absolutely, and considering what we have seen in the chemical industry, any sort of recovery is something that the street would like for sure. We'll do one thing, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.